Hey traders, this is Tosh. I go by T Bradley 90 in the My Investing Club chat. A general reminder for those who do not know, MIC is having a 1-year anniversary event where BOW is going to be trading live in front of our members. It's coming up August 17th. Mark your calendars. As an added benefit for our members, the event is 100% and exclusively free for annual and lifetime members. While lifetime on top of that get extra coaching before the event and guaranteed front row seating. While most charge for these events, we show our support by making it, again, free for annual and lifetime members. If you are interested in signing up for this event, DM tbradley90 in MIC Slack chat and or email myself at tosh@myinvestingclub.com. Now, we have a very special video for you guys this week as Aloha Trader, whose real name is Austin, one of our head moderators in chat, reprises his role for episode 12 on his weekly Thursday webinar every week at 7 p.m. Eastern Standard Time. And this week, he's going to talk about patience and strategy in a slow market with one of our other moderators, James Freedlender, as a guest star. And while today is just a preview of the full-length video, if you want to watch the full length or any of our exclusive content, then become a member of MIC.
I want to be talking about patience, and especially because of what, patience is really what's being required in this market right now, right? Because it's just been so slow, so dead. Like, I've seen a lot of good jobs, like, for people just in the chat, just like not refusing to trade, which is what they should do. If your setups aren't here, you shouldn't be trading. And I want to go over the ins and outs of patience and why it's one of the most frustrating, glorious things when you get it right, horrendous when you get it wrong, just mental brain of trading, right? So without further ado, let's get started. Let me make that go all the way to the top, all the way to the side. All right, and let's get going. So today, I'm going to go over key traders as normal, market sentiment as normal. Got a couple trader topics I want to go over. These have been like the most frequently asked questions in this market, so I want to go over those. I have a strategy board and a site center today because for a couple of reasons. One, I want to get them out before next week. Next week, I'm not going to be able to do the webinar because I'm flying out to Philly. And in order to get there by Friday to fly in from Hawaii, I need to leave by Thursday. So there won't be a webinar next week just because I won't be able to, I'll be on the plane. So I wanted to do one of each. And because key traders kind of sucks. I don't even have any for this week. So, so that's kind of compensating for that. And then we're going to have Q&A as normal. So anytime you guys want, if this is your first webinar, anytime you guys want during the webinar, just throw out a question. I'm going to scroll up at the end and we're going to try to get to them all. So the key traders that I really care about this week is the SPY. It's the only really one that I think is driving mostly everything right now. Because small caps are kind of dead, and large caps, it's earnings season, but everything's kind of being, everything's playing kind of copycat to the market. So this is, I think, the biggest stock going on right now is the SPY. What's the SPY going to do? I think the healthiest thing that the SPY can do for the small cap is to recover this dip and just keep charging as normal, get back over into the high 290s, go back and test 300. That's what I'm hoping for. My biggest fear is that this is a kind of a dead cat bounce push today. I was really excited about it, but I think this is the overwhelmingly important topic of the week is what's the SPY going to do? Because China just devalued their currency, right, in fight back to Trump's tariffs. So this is causing, fear. You've seen TVIX, UVXY, all of the VIX ETFs going soaring this week. I think that's for people who are experienced with that. I think that might be a good short of, when the market recovers. That's typically a good setup, not something for the beginner trader because ETFs are very tough to trade. But that's something that I'm looking forward to next week. I'll be probably in the large cap room going over those with those guys and Brian. So anyway, I think the most crucial level for the SPY is to hold 285. I'm not opposed to it coming back. I'm not ruling out that it's totally could just go right back to 285, go test it a couple more times, right? So this is, I think, the key trader of the week coming up in the following weeks. Anyway, and so getting into the market sentiment, there's actually, I thought it was going to be pretty death, right? Like I thought, like normally my market participants panel over here from week to week, it's like red, 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 red. And it's almost like if you go through my webinars week to week to week, it's clear that like the edge is on the short side for these small caps, right? Because just everything's dying. I was really surprised. There was a lot of stocks that kind of held up. Like all these green stocks are like I call active market participants in the market that really held up. They're slow movers. Most of them are slow movers, and a couple of them are larger priced. But they're the only movers, and they're actually holding. Like EVH got killed on the first day, but today it had a solid rebound. I think very unexpectedly. So I think we're starting to see some turn in the market a little bit. Like as earnings season, is running through its course. It's going to be ending pretty soon. I think like with the strong bounce on the SPY today and stocks kind of holding green, I think it's showing some good signs of climbing out of this pit that we're in. That's my optimism for the week on it. But anyway, surprisingly, the reason why there's not a whole lot of red is because there's really not a whole lot of really movers at all to be red. I think if there was more small cap movers, we might see more red. But these have just kind of been slow, swingy, like holdy stocks, like ACHN, right? Just slowly holding, grinding, NPTN grinding. So the positives, earnings season's coming down. The SPY had a strong hold on 285 this week. I think 3 days ago, when it was really testing on whether we're going to break down lower when it went down to the 70s one pre-market. And we have seen increased movement from last week. So the sparks of hope for next week is that because stocks are holding, the SPY is holding strong, we might get the black swan that everybody's waiting for. And this is kind of what's a common occurrence in this kind of market, right? When the market's totally dead and it's up, it's kind of very famous. Like we get them, like AQXP was in August and AWX was, or July to August. AWX was in July to August. We get big, we normally have like one big black swan in the middle, in the heat of, in the midst of the summer, like right when everyone just expects nothing, right? No one has high hopes for anything. There's one runner that's gonna come along. So yeah, so like last week I created this decrepit market because that's what I really felt it was last week. Just like last week was the same for me. Like I didn't really make any kind of trades last week either. But it was really just every day, wake up, nothing there, no small cap gappers at all. So I feel like we're kind of pulling out. This is where I put us here. It's kind of a long period here in this dead market. So for those who haven't, for those who this is their first webinar, I always think there's a buy market, a longers market, a shorters market, and a nobody market, right? The nobody market, it's really hard for everyone to make money. You see choppy stocks all the time. Stocks never get any momentum because we're just coming off of the tankers market when everyone is used to just short selling and winning, and then all the longs just give up basically. Like, well, if everything's just going to tank, why am I going to buy? And if you have no buyers, you have no momentum. So, this is the cycle that I feel like we all kind of circle, and I feel like we're getting close to the buy now. And I think any day now, the black swan's going to come, and we're going to be full on right over here. Anyway, that's what I'm hoping for. So the first trader topic I want to go over is a common trader fallacy. And I got a couple of questions about sizing this week, which I felt was pretty odd because what is there to size up on? But I wanted to go over it because it was a common question I got. Bigger size leads to larger profits. And, mathematically, we obviously know that this is the assumption, right? Or mathematically, we obviously know this is technically true. But what's the assumption in that being true? The assumption is that if we can trade the exact same way bigger as we do smaller. And we obviously know that's not the case, right? Everybody can hear me, yeah? Just gonna check. I think my mic just blinked. Okay, cool. I just wanted to make sure. It's obviously true that like if you trade bigger, you can make bigger money. But the thing is that our emotions, our human nature gets in the way, and we're not we're not geared for this, right? We're not geared to accept risk beyond our tolerance. This is why we each have a risk tolerance, right? So when we start to size into a level to where we can't take the same amount of losses in a row, this is what alters our decision making. And the second your decision making is altered, you're no longer trading the same way. So the profitability guarantee of just more profits just gets eliminated, right? So how do you know when you're too big or too small? Everybody knows how easy it is to tell when you're in too big, when you're in too big on a losing position, right? It's clear. Your heart pounds and you're literally screaming at your screen, right? This is, yeah, when you feel sick, when literally you're like, you can feel your heart pumping throughout the trade, right? This is how you know you're in too big for in a losing trade. But there are signs there that you can pick up on. There's definitely a way of being too big in a winning trade to where you're totally going to mess up the trade. You're just gonna cover it all or sell it all emotionally, and you're not even gonna give it the chance to give it the potential that you could have if you were smaller. So the sign of knowing when you're too big is when you get kind of too excited, when you're like, oh my god, oh my god, oh my god, what am I gonna do? What am I gonna do? Like do I take the profit or not? Like it's more than I've been up like ever. It's more than I've been up all week. Like when you feel like you want to take all the profit right now because the P&L that you're seeing is larger than you've ever seen, right? Or is larger than you've seen in a very long time. This is, and it hasn't just, and it's not like an offering, right? It's not like an offering, like something really rare. This means that you're in too big, right? This means that the best scenario, like it's a good scenario to be in. The best thing to do in the situation is to size down and pretend that that it's a happy mistake. You were in too big and you got extra profit out of it, but you were kind of lucky. Get back to the size that you're used to trading, and that way you can trade it the best way possible, right? How do you know you're in too small? Again, you know that you're in too small in a winning position when you start getting greedy. You're gonna start thinking, well, what's the point of even holding the size, right? If it's too small, right? You're gonna start feeling that question, like, is it even worth it? You're gonna have the is it even worth it mentality, and that's how you know you're in too small, and that's how you know that you were basically, and this leads into what I'm going to talk about today. This is how you know that you were too patient, right? Too patient with your size. And I think I have a quote in here later, but like, patience has a limit, right? If your patience is, when you extend your patience too far, it starts to go into cowardice. And like Joe and I have talked about a lot of times, like there's that happy mix of the fear that you need in a trade. You need enough fear to get to be profitable, but not enough fear to blow up. It's that combination of fear and that happy patience level, that happy fear level that's going to make a trader successful or not. And so I'm not going to go too much in detail because I already talked about this in the previous webinar, but the best way to size up is incrementally, of course. And when you do size up, like there's different opinions on this, and it's my opinion that the best thing to do is to literally scale up everything. So the strategy board. So this is another, like, this is one of my, like, the most common questions I get, and it's something like, I like answering it because I think I think I have a good answer for it, which is why I put it in here. But it's something I see it in weekend mentoring. I get it probably at least once a day. So I really want to go over this. I want to defog a little bit of the confusion around the death line strategy. Death candles and death lines are different, guys. A death candle is typically a good sign that the move is over, right? It's a good sign that the potential move is over, but it's not necessarily when it is over, right? There's always a possibility that death candles come back. There's a possibility that death lines come back, but death candles normally happen, I'm going to say, near the top, which means that there's still a greater chance, in my opinion, of a bid catching up. Like, people still might try to buy that dip, and if there's enough people out there I've seen death candles squeeze. It's one of my favorite long patterns. Death candles are not death lines, but they're often death lines come after death candles. So keep in mind they are different. The death line is literally a line, right? The candle just comes out of nowhere. The death line is normally known. So what is the death line, right? Like I see people ask, where's the death line? Like in chat, you'll see it every single day. People ask, what's the death line on, right? So I think there's slight different definitions among the chat. I think though for the mod, it's pretty consistent. We look for the death line is the last major support, and it's going to be a well-defined support too. It's not going to be like, well, it kind of broke through 5, so I think if it goes back under 5, it's the death line. No, like you're going to see the stock like majorly like rip up. It's going to majorly pull back. It's going to have a nice bottom, nice higher low, and it's going to go, and it's going to be like on a 5-minute, 15-minute chart. You're going to be able to see this death line. It's going to be a clear support, and under that, every long is essentially going to be underwater, right? This is basically what you're looking for, is the last major defined support. It can happen on any day, right? The death line can trigger on day 1. It can trigger on day 2. It can trigger on day 6. But it's the last major support. As long as there's like a super defined support line, then it's a potential for that to hold, right? Support and resistance should always be respected. One death candle can totally lead into a major support that holds and rips the faces off every single person that chased that death candle short. So this is why death lines and death candles are different. So that's the death line. And why does the death line exist? Like this is fundamental in understanding, like in identifying a death line. A death line exists because of what I call the generic small cap pattern, right? And this is basically the pattern for every single small cap. It's super generic. You're not gonna, what I say right now is not gonna make you rich because it's all known, right? The Q&A is open. And so James, I want to ask you a question.
Sure.
I want to ask you, what setups are you mainly sticking to in this market? Like what are you focused on the most in this market?
So it's funny, like right now with the market being as slow as it is, my biggest setups have obviously been I've been getting back into pre-market trading, which is something that it's funny, like I don't usually recommend to anyone, especially if they're under PDT. I think it's a tough thing to get into. I think there's too much risk, especially when you're kind of stuck, with only a few trades in a week. But pretty much my setups have been, these light gappers that we've been getting. And I'm just pulling up the yearly chart. I'm kind of looking at the daily resistance, same thing as usual. Nothing's really that different, and just kind of taking advantage of the lack of a buyer's market. So once we're kind of seeing the stock pop up to like a certain level on the daily chart, reject, I've kind of been using the tape a lot lately to kind of see unloading at those levels. And that kind of gives me a little bit of an inkling to, kind of put out a feeler. And then from there, I'm kind of trying to add my size into a winner.
And I would guess that those feelers are kind of been like, I would have to guess kind of like the tops, huh? Like,
yeah, I mean, it's right now, like when you're looking at my chart right now, everything looks great. It's not always going to be like that. I'm very much willing to cut my trade for a loss and try again. I've really shifted into kind of focusing my trading on risk reward. Whereas before I really kind of didn't even have that asset in my playbook. So yeah, I mean, lately it's just been nice. Like the feeler has been the top. And then once I kind of get confidence in the play, I try to add the rest of my size on the next bullet. And even so, I'll add size on the way down. Like Joe is great at trading the death line setups. And, if a stock breaches death line, I know guys like Tom too, like, they'll throw on size when it breaches and then just move their risk down. So that's something I've really been working on and kind of utilizing lately. And it's really been working out well, especially while the market's slow right now.
Right. And it's funny you bring that up because as you're talking about it, like I'm visualizing the charts, like moving like that, like the kind of charts we've been seeing. And like, just for everybody here, this is exactly kind of what you have to do, I think, because like be super on it about the risk reward and not be afraid to cut your trade, because right now, like James is getting like conditioned to this market, kind of like he's adapting to it a little bit, right? And I would guess so is a lot of other traders. They're getting like adapted to this kind of almost, I want to say, easy market, right? But it's easy, but it's hard to get size onto these trades, right?
Oh man, it's tough. I mean, we're coming off of a hot market, or at least a time when it was hot. So
Yeah.
some of these plays pre-market, I mean, you see it rip on you. So obviously every time you're kind of playing these, like that's why I've just conditioned myself that my first bullet really isn't big. Whether it's, 1,000 shares, 1,500 shares, sometimes it's just 500 shares, just to kind of, like D always says, kind of get your feet wet.
Right.
It's, then once you're confident in the play, you can throw on some size, and like I said, take advantage of the death line when it comes. But yeah, I mean, right now is the time to play small, and I mean that's kind of what we've been working on and utilizing. So when the market gets hot, we can kind of, I want to say stack up a little bit, but go from there.
And I actually think that's the perfect answer, because what I'm thinking right now is that basically what you just said, it was great. It's just like I'm totally cool with staying small, whereas I think a lot of traders are going to try to adapt to this market, and they're going to be getting really impatient that their feelers are gonna that their feeler trades are the top, and so they're being forced to add lower, right? They're being forced to add lower because they're struggling to get size onto these trades that are just barely popping up and falling. And what they're gonna do is slowly get conditioned, start throwing that risk out of the window, start being more comfortable with sizing in lower and lower, and that's when the black swan's going to happen.
See, I mean, my biggest thing that has always kind of gotten me in trouble is kind of adding size into lows and shorting into weakness. I know you guys talk about this constantly, but
Right.
the times when I get comfortable, when the market's kind of going my way, and I'm either on a green streak and I start shorting at lows, or kind of anticipating a death line break, not letting it confirm, that's usually when I get ripped on.
And it's been working in this market, and people are getting trained, I think, with some bad habits, and I think that's innately what's going to cause the next one.
Exactly. And I mean, I don't know, I mean, obviously you guys remember MLNT, I know I was on the phone with D and Alex, and we all shorted. We had a great trade in the morning, and then we're like a little, I don't want to say cocky, but we hit a little bit of a lower point, and then we're just all staring at this thing rip us open and beyond shock. And that's kind of what's going to happen eventually if we continue this, get comfortable shorting lows and throwing on size when really there's no meat left,
Exactly.
Hey traders, this is Tosh. I go by TBradley90 in the My Investing Club chat. Just wanted to reach out and say if you have any questions about MIC, joining MIC, maybe you're a member already, you have 3 ways to contact myself personally and through MIC. You can hit our social media, you can hit me through PMs in chat, or you can contact us through my email at tosh@myinvestingclub.com. That's TOSH@myinvestingclub.com. I will get back to you in a timely manner, and I'm saying this because I'm here to help, and I don't want anybody to be afraid to reach out and ask any question that they have. We are here for you guys. All right, see you guys.